Well, the hard money people can close faster. They can close within 7 or 10 days, versus conventional bank will take at least a minimum of 45 days. And it's also due to the financials. If you don't have the proper tax returns, quote unquote, for the bank to qualify you, the hard money lenders don't necessarily look at the tax return. They look at the property and they look at your resume. The expectation of the hard money lenders is for you to pay them off within the next 1 to 3 years. They don't want to be your main lender for the next 30 years.
Welcome to CRE Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CRE Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Kamyar Rezaie, a UCLA Economics graduate. He's been a driving force in real estate industry for over 20 years, beginning in residential real estate before transitioning into commercial in 2008. And in just a minute, we're going to speak with Kamyar Rezaie about commercial real estate financing options in 2024. But first, a quick reminder, if you like our show, CRE Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on Commercial Real Estate Pro Network on the YouTube channel there. And while you're there, please subscribe. With that, I want to welcome my guest, Kamyar Rezaie. Welcome to CRE Radio.
Hello, Darren. Thank you for having me.
I'm looking forward to our conversation. But before we get started, if you could take just a minute and share with listeners a little bit about your background.
Sure. So I'm a graduate of UCLA 2002. I started my career at the age of 16 on private tutoring in math, chemistry, and physics. Throughout my years in college, I discovered finance and working with numbers is my go-to, and that's what I want to deal with my whole life. My father was refinancing a property toward the end of my UCLA era, and I thought the gentleman that came to handle the loan documentation was the loan officer, did not really do a good job, in my thought. So I thought, I would be a better fit for that, and that's where it all started for me. And that's where I decided in 2004 to get my agent license in March. Then I realized I could get my broker license, so I got that in December 2004, and I started my career on the residential side.
Got it. I'm sorry, and you said your license, your broker license, was that your realtor?
Yeah, license to be able to do, yes, real estate and loans. At that time, an NMLS number was not necessary until after 2008, 2009.
Gotcha. Well, great. You've got some family history there, at least with. Does your family own real estate? Then is that
properties, investments?
Gotcha. Well, that's always kind of neat to hear how people get into it, and especially knowing that there's generational interest in real estate. That's great. So tell me. Today, we're recording this in June 2024. What are the services that you provide?
Today, I provide my main line of business is commercial lending on the either owner user side or investment. I help a lot of clients on the real estate side, on the buy side. I don't deal too much with the sell side. And because I started my career in the residential, lending real estate, those referrals and existing clients, I still help them with the residential side. But my main is commercial lending.
Got it. And with respects to lending, is there any limitation on the asset class that you can lend on?
We have no limitations.
All right. And then what about territory? Are you limited to the immediate area that you're in, or?
On the lending side, I can do nationwide on the commercial aspect, but in terms of on the buy side, representing a buyer, I can only do California.
Got it. Got it. So let's talk a little bit about just what the financing outlook is right now, and what you see. I know we've come through the historic low interest rates that were available during COVID, all the cash that created all the inflation. Um, where are we today as far as the interest rates that you're making available, or you have available, and give us some sense of what kind of terms you can, what's a range of opportunities for somebody looking to buy a property?
Right. So right now on the commercial aspect, the majority of the properties being bought are owner user properties, and they are being financed through either SBA financing or conventional financing. SBA is more, it's better position for the buyer because they only have to put 10% down. On the conventional aspect, it's 20% down. But overall, loan amounts are, I would say right now are average about, 1.5 to about 5 million for Southern California. And the programs, there's obviously, we do have the investment programs for other sectors, but obviously it's a lot tougher. And due to the higher interest rate and the cap rates, they require sometimes 35, 40, up to 50% down. So an investor coming in and wants to buy a particular building, to add to their portfolio is going to be ready to come in about, almost, I would say 40 to 50% down average today.
Yeah, now that's considerably different than what we were experiencing here, a few years ago. What would you expect, say 2 or 3 years ago, the lending terms and criteria look like back then?
I would say back then you probably get in with about 30 to 35% down. And it was banks were a little more lenient on the investment aspect. Today they're very, conservative, because they don't, the outlook still is not, concrete. What's going to happen? Where are we going to be going with rates? There's a lot of expectations beginning of this year for rates to come down on the prime rate along with the treasury bonds. But up till today, it has not come down. They've said, they can keep it stable, might come down once, might go up. So there's really no, direction of where we're going to be going yet. And the inflation reports are, have been, higher rather for the whole year.
Yeah,
During election years, historically, the rates have come down, but this is a unique year.
right, right. So let me ask you, the nature of commercial financing, what kind of terms, as far as the length of the payback schedule, are typically available? And do you see, is there a wave of loans coming due uh, that you foresee, making things interesting?
I'm going to answer your second question first. There's billions of dollars of loans coming due. And many of them will have issues because, due to the cap rates and due to the cash flow, they're going to have to put money out of pocket to be able to get the refinance done. Or they can do refinance with a mezzanine second, which is like a bridge, which is a lot, higher interest rate. So there will be difficulties in the refinance, and you are seeing more office buildings and bigger buildings being foreclosed on today. And in terms of the length of the loans, typically for the owner user aspect on a conventional loan, the terms are typically 20-year amortizations. You get a 5-year fixed, 10-year fixed, or even a 20-year fixed amortized over 20 years. On the SBA loans, they are typically 25-year amortization, and you can get those 5, 7, 10-year fixed, or even a 25-year fixed amortized over 25 years, which a lot of people don't know about the SBA. In terms of an investment products, depending on if it's multifamily, you can go all the way up to 30 years amortization. On other investment products, they're typically 20 sometimes 25-year amortization, depending on your relationship with the bank and your past experience.
Got it. So let me ask you, so as a lender, the SBA loan you mentioned, is that something that you are able to do, or do they have to go through a special SBA approved bank?
So I'm a broker, I'm not a lender, but
Okay.
I am able to entertain those SBs and help coordinate them through different banks.
All right. And if in order to qualify as an owner user, is there any kind of a percent of occupancy or a square footage, or could you buy a building that's multi-tenanted where you're one of the occupants?
On any SBA loan, you have to occupy 51% or more of the building.
Got it. All right. And you mentioned all these loans that are coming due, and kind of the foreclosure um, aspect that's kind of afoot. Um, any sense of how that's going to shake out? I mean, I know I've got clients that have figured out how to make money in all markets. Um, I assume there's going to be a lot of pain for the people that are losing the properties, but also have come to realize that banks don't like being landlords. Do you have any kind of sense of how this will play out?
Um, it's a very hard question. I mean, we are seeing a small amount now, depending on the amount or let's say percentage of the bigger buildings that do go foreclosed. I mean, we do still have a lot of buyers out there that are sitting on the sidelines with a large amount of money. But it depends what metropolitan area they are in, and it depends how much demand there's going to be. On the other side, it's also going to depend on where is the economy headed, and a lot of them individuals, high net worth individuals who are sitting on the sidelines want to see what's going to happen with the elections.
Yeah. Yeah, no, a lot of wait and see uh, kind of strategies being employed. Um, as far as buying, if somebody is of mind to buy, whether it be an investment or as an um, an occupant, owner, user kind of a type property, are there any unique strategies that you see in play or that you encourage people to consider, uh, during these times where pricing is kind of changing based on interest rates and just the market in general?
Sure. So it's completely different strategies between the two. On an owner occupied side, if you have a business owner who's been renting, either being 5 years or 20 years, when they do buy a building to own, there's a lot of write-offs that they can employ, in terms of the interest expense. Um, Basically, they can also use something called the cost segregation, which they can speak to the CPA about, which is accelerated depreciation. That allows them to, pay less taxes in the beginning years of owning the building. And, when you are in a, SBA loan and you get it for 25 years, and if you don't refinance or anything in the interim, you're going to pay off the building. Now, I mean, having a, say when you have a building and if you occupy at least a 51%, if you're renting out the other 40 up to 49%, they're going to help pay for your mortgage.
Yeah. No, that's always been my view of my short limited view of real estate is that the tenants, you know, pay off my note, and I end up with an asset regardless of what the economic situation is in the day. To have an asset that's paid for by others is a pretty sweet strategy. Um, as far as the different uh, assets asset classes, um, you mentioned some of the larger and office properties you're seeing be returned or foreclosed on. Um, have you run into or have you seen uh, any investors or others looking to transition these properties from their original asset design to perhaps a different use, i.e., multifamily?
So the biggest asset which you are seeing that, especially here in downtown California, is the office building being converted to apartment buildings. And there's a lot of incentives from the local officials along with federal officials to do such.
What can you speak to some of those incentives that you're seeing?
I don't know exactly what they are. I read different articles about them, but they are. I mean, if there's a particular building, you can obviously go to your local, um, local building and safety and ask them. And there's also federal stuff. I don't know the exact details of them, but I know they're being offered throughout, actually nationwide.
Got it. Got it. And are there's additional or in those different plans, do they work in conjunction with what you're able to provide as far as financing, or are they a totally separate?
So no, so how I would be able to help them is, let's say they identify a particular building and they're like, okay, I want to buy this and convert it. I can help them do a two-part loan, which would be a purchase along with the construction aspect to convert it.
Got it. Got it. So you could help then. Is that permanent financing then, or does it have to be refinanced upon the
Yeah,
conclusion of the?
it can be a bridge financing. Is it going to be permanent? It depends on the bank and it depends on the financials of the borrower and the kind of relationship we can, put with the bank.
Got
Every
it.
every purchase will be different.
Got it. So your list of available lenders that you have, how has that changed here in the last couple of years? Is it the same parties? Is it different terms, or has the list shrunk or changed players? Can you speak a little bit to that?
Yeah, so the bigger banks and my lenders have not really shrunk. Maybe we had, the big one or two of the bigger banks obviously go under, which was all over the news, that created a scare in the market. But overall, no, we haven't really seen a big change or shrinkage of lenders out there. Have they, become more conservative? Yes. But there's also other lenders in the marketplace, who are taking on, more riskier loans.
Right, right. And those those newer lenders that are taking on the more risky loans, I assume more risk, more expense, higher rate. Is that
Correct.
okay? And can you describe one of the more higher rate loans you've done as far as the project and what the buyer was doing?
When I speak about higher rates and newer lenders in play, they are the so-called the hard money lenders. It's either individual money or it's money that they put together through family offices and thus. I mean, I just did one that was about like 10% on a building purchase, 40% down. But you do see some higher rates as far as 12%, 14% rates out there on the hard money side. In the market we are today, the word on the street is that there's more hard money loans being used versus conventional loans.
Do you think that's as a result of just the finances of the property, or just the buyer, or what would you attribute that to?
It's well, the hard money people can close faster. They can close within 7 or 10 days, versus conventional bank will take at least a minimum of 45 days. And it's also due to the financials. If you don't have the proper tax returns, quote unquote, for the bank to qualify you, the hard money lenders don't necessarily look at the tax return. They look at the property and they look at your resume. But the
Right,
expectation of the hard money lenders is for you to pay them off within the next 1 to 3 years. They don't want to be your main lender for the next 30 years.
right. Yeah. And with that, do are the hard money typically interest only?
And typically, they are interest only, yes.
Interest only. Okay, got it. So for somebody looking to buy a building today, let's talk about from an investor standpoint. What would you recommend they do? I mean, as far as keys to finding and financing a property.
It's a really hard question. It's one of those questions where you have to see how much risk are they willing to entertain. Number two is how much back do they have after the down payment? How much, can they tolerate to make the payment out of pocket if there is no tenants? 6 months, 1 year, 2 years, it's all going to be about, are they going to be able to afford the carrying costs if the building is vacant? So there isn't any particular sector I can recommend for anybody. It all will depend on their risk, how much risk are they willing to entertain?
Got it. And for somebody that's looking to be an owner occupant, does it change as far as what the recommendations might be, or what concerns you would look at?
Well, on that side, it's a lot easier because again, they're going to be occupying most of the space. They're doing their business out of there, you know. And if their business is going, obviously it's a great deal. But if they see their business is kind of shaky or they don't know what the outcome is, it's going to be their call if they want to, take that, getting the SBA, they have to put 10% out of pocket, and they're personal guaranteeing the loans. So they have to be, willing to, again, that's a risk that they're willing to take on, but it's a much less of a risk versus a investor.
Right, right. So if you were to put out there the ideal opportunity for you right now, what's an ideal somebody coming to you that you feel strongly about the ability to provide funds for?
The perfect deal in today's market, even with the higher rates, because of the advantages and tax qualifications they get, it would be a SBA loan for somebody trying to buy like small medical building, a small retail, small office building, an industrial condo, any of the sectors which fit that criteria would allow them to grow and own the building meanwhile.
Got it. So more of an owner operator is an easier uh, option as opposed versus an investor right now. Is that right?
Right. Yes.
Got it. Got it. Hey, Kamyar, if we could, I'd like to shift gears here for a second. As I mentioned to you before we started, by day, I'm an insurance broker. And as such, I work with my clients to assess risk and determine what to do with the risk. And there's three strategies we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, we look to see if there's a way we can transfer the risk. And as such, I'd like to ask my guest if they can look at their own situation. It could be your clients, investors, the market, the Fed, whatever it is that you identify and consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance-related answer. And so if you're willing, I'd like to ask you, Kamyar Rezaie, what is the biggest risk?
The biggest risk which I see is because I faced the 2008 era where the banks basically got, hit hard. No one had money first on the bank side or on the consumer side. So the biggest risk in my industry is if the banks don't lend anymore, you know, then everything comes to a halt and there will be no movement, and we always need money, even at the higher rates, low rates, you always need money. You always have to have refinances. You always need purchases to continue. The biggest risk is, banks stop lending.
Yeah, no, that's something I don't think everybody understands or recognizes in the day to day, just how much the economy is you know is related to the availability of funds to borrow. Um, and that's an excellent point. I know I remember when the collapse back in '08 here in the conversation, and it was eye-opening to see then, but now, I mean, as we hopefully don't inch into that, but get closer to perhaps that happening, it is something I think more people are more sensitive to, and fingers crossed that we don't get to that point. So I appreciate you sharing that. Kamyar, where can listeners go if they'd like to learn more or connect with you?
Sure. So they can go to my website at wembleysinc.com. They can always call my office at 818-703-9337, Or they could always see me on my podcast, Minds of Commercial Real Estate. We have a YouTube channel.
Minds of Commercial Real Estate?
Yes.
Awesome. Well, Kamyar Rezaie, I want to say thanks again for taking the time to talk. I've enjoyed it, learned a lot, and look forward to doing it again.
Look forward to it.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Till next time. Thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.